Good day to Dr. Shahira. We are from Group A, and today we will present our project entitled Housing Loan Financial Analysis. Let me introduce my group members, included me, Jixin, Jawan, Tianxing, and Weize. Purchasing a house is one of the most important financial decisions for individuals and families. However, the personal savings are often insufficient to cover the full cost of purchasing a property. Therefore, the housing loans are commonly used to finance home ownership. According to Malaysia's residential property market analysis, the housing loan balances reached 869.54 billion ringgit in August 2025, this indicating the increasing dependence on housing financing. In Malaysia, the different banks offer the different loan packages with varying interest rates, repayment structures, and financing costs. Because the housing loans involve long-term commitments, selecting the right loan package is important to reduce the financial burden and improve affordability. For this project, the client intends to purchase a house priced at 450,000 ringgit. After paying a 10% down payment, the remaining 405,000 ringgit will be financed through a housing loan. The challenge is that different banks provide different interest rates and loan structures. Therefore, several important questions arise. First, which loan package offers the lowest financing cost? Second, which package is most affordable? Third, which package reduces debt faster? And finally, what financial risk should the borrower consider? The objective of this project are to compare the three housing loan packages. Second is to analyze their amortization schedules. Third is to evaluate the affordability and financial risk. Finally, is to recommend the most suitable housing loan package for the client. To ensure a fair comparison, several assumptions were made. The loan tenure is fixed at 35 years. The interest rates are assumed to remain constant throughout the loan period, and the interest is compounded monthly. Then, all monthly installments are paid on time without any default. And last, the borrower does not make early settlements, additional principal repayments, or refinancing activities. The three housing loan packages compare are Public Bank More Plan, Maybank Standard Housing Loan, and CIMB Home Loan.
This slide shows the comparison of three loan packages. Maybank offers 3.9% of interest rate, which is the lowest. Public Bank offers an interest rate of 4.1%. CIMB offers the highest interest rate at 5.1%. As shown in the monthly installment comparison, Maybank requires the lowest monthly payment of 1,769 ringgit. Public Bank requires 1,818 ringgit. CIMB requires 2,070 ringgit. Similarly, Maybank records the lowest total interest paid over the entire loan tenure, accounting to 337,991 ringgit. Public Bank requires 397 ringgit. CIMB records the highest financing costs at 464,353 ringgit. Therefore, Maybank clearly provides the lowest financing costs among the three loan packages. This graph shows the relationship between interest rate and monthly installment. The result indicate a positive relationship between interest rate and repayment amount. As interest rate increase, borrowers are required to pay higher monthly installments. This demonstrates that even a small increase in interest rate can significantly increase the long-term financial commitment of the borrower.
So in this part, we made the amortization schedule for the three banks respectively. So first of all, this table show the first of the 12 month of the amortizations schedule for the med banks. And after that, and this is the first 12 months of the amortization schedule for the public bank. And here is the first 12 months of the amortization schedule of the CIMB bank. So there are similar repayment patterns are observed between the public bank and also the CIMB banks. In the early stage of the repayments, a large portion of the installment is used to pay the interest instead of the principal balance. Because the CIMB bank has the highest interest rate, a larger portion of each payment goes towards the interest charge. As a result, the CIMB bank reduced the principal balance at a slower rate compared to the main banks and also the public bank. So after that, this graph compared the outstanding loan balance over the first 12 months. All three balance decreased gradually as monthly payments are made. However, the Maybanks records the faster reduction in the outstanding balance with the 399,469 ringgits. This shows the Maybank reduced the loan balance more efficiently compared with the others banks because a larger portion of the monthly payments are goes towards the principal repayment instead of the interest. And after that, this chart compare the amount of the principal repaid after 1 years. So after 1 years, Maybank achieved a faster debt reduction among the three loan package by repaid of 5,539 of the principal. This allowed the borrowers to build home equalities and more quickly to reduce their outstanding balance faster.
Based on our financial analysis, we recommend the Maybank Standard Housing Loan. The reasons are: first, it offers the lowest interest rate of 3.9%. Second, it provides the lowest monthly installment at 1,769 ringgit. The third is result in the lowest total interest paid over the 35-year tenure. The fourth one is it achieves the fastest principal repayment and debt reduction. So in addition, Maybank through flexi structure allow borrower to make extra deposit that directly reduce the loan principal. So although there is a late payment penalty of 1% per annum, the overall benefit outweighs this advantage. So therefore, Maybank provide the best balance between affordability and long-term financial costs. Besides comparing financing costs, borrowers should also consider long-term financial implications and risks. Under long-term implication, borrowers should consider mortgage insurance such as MRTA or MLTA and understand the cost of capital associated with 35-year loan tenure. For affordability consideration, borrowers should ensure that their debt service ratio or DSR remain within acceptable limit. They must also prepare for additional costs such as legal fees, stamp duty, and property maintenance expenses. For financial risk, borrowers should be aware that housing loans are based on floating interest rate. Future increases in the overnight policy rate or OPR may increase monthly installment. Other risks include exceeding the SR limit, property maintenance costs, and mortgage insurance expenses. Therefore, borrowers should evaluate not only the interest rate but also their overall financial capability before making a decision. In conclusion, interest rate play a significant role in determining monthly installment, total financing cost, and principal repayment speed. Among the three housing loan packages analyzed, Maybank Standard Housing Loan provides the lowest financing cost, the best affordability, and the fastest debt reduction. Therefore, Maybank is the most suitable housing loan package for the client. These are all the references. That's all from us. Thank you.